Hey, what's good, everybody? Happy Tuesday already. A great Tuesday, actually. The stock market's pushing a little bit higher. We'll get to that in a second. First thing I want to point out, we are working on a class for our clients. Personal finance, top to bottom, credit, debt, taxes, insurance, investing, you name it, budgeting, spending, everything. The exact details that you need, that you should have been taught, the things that you probably spend hours researching and finding all kinds of different opinions on. This is going to be all the facts. I got a couple opinions in there, but all the facts. Our clients have been doing a great job actually sending in suggestions for these videos, unbelievable suggestions, things I love to include. So we are just over 55 videos planned for this. I'm hoping to start filming this thing as soon as next week. So a whole class coming out free for our clients. We're going to send that out. Also, health savings accounts, if you're interested, coming out by the end of the week. If it's something you want to add to the mix there, happy to help you with that. If you just have always wanted to start one or you want to transfer one, that's cool as well. It is raining so hard here. So if you hear the thunder, sorry about that. Anyways, also, the videos that I post, do me a favor, leave a comment or something. Do you understand that when we talk about investing, that involves math that revolves around compound interest? Did I miss that somewhere? Because some people really rag me on some of these investing videos because they think it's a linear equation. If you invest 5,000, then the next year you invest another 5,000, you have a grand total of 10,000. And they think I'm somehow lying to them about the math. I'm like, where did I go wrong? I try to make these all really nice and specific videos, but apparently we either have to help them a little bit more, or I have to be a little clearer, and I think it's the first. So we'll see. Let's get started here because the stock markets were pretty exciting today. Here's the thing. If I go to the charts, it was not one of those, exciting last-minute moves or exciting starts or anything. It was just a nice, strong day. So if we go to the charts here, here's a daily chart of the S&P. Everything was just strong most of the day. Now, we know if you've been around, you know that the markets here for the last 13 days now have just chopped around sideways. All we are is at the upper end of the range. So we pointed out before that when the stock market fell to the 200-day moving average down here, that red line, we said, okay, now this is a time correction. Go back to the video that I posted. It is, the thumbnail says time correction or price correction, and we started saying this is a time correction. That is panning out pretty much as expected, where the market basically does nothing while time passes rather than fall some more or price correct to some level. So far so good, perfect. Financials, very strong today, up about 1.5%. Semiconductors, killing it today, 3% on the day, and they stayed strong all day. Remember, I always tell you guys, semiconductors or tech stocks and the financials are needed to move together in order to have the markets have a strong day. If the two are on opposite ends where the semiconductors are maybe moving lower and the financials are moving higher, it's very hard to get a really strong rally. It can happen, but it's really hard to get the rest of the markets to move behind that. Well, today, the financials and the semiconductors killed it, just did really, really well, no complaining there. And so today, this move might be different. So if we look at the S&P 500, we've been talking about this 200-day moving average being challenged, and is it gonna push away from it or is it gonna sell off? And I'm leaning to the downside. I think the market still has more downside. Today could have been the first step in proving me wrong. However, if this day, today, had happened anywhere, just after some move, there was a really strong day like today, then I would say, okay, that's a lot of strength. That's impressive. However, this is nothing interesting. This move today, we've seen it a few times over the last 13 days. So we need a little bit more, right? The markets need to do a little more proving, I think, to especially long-term and institutional investors to make them comfortable to dive back in. The Dow was higher by 400. S&P, no, it was not up by 400. It was up 435 or something, I believe. The S&P 500 added 48, I believe, and the Nasdaq 100 was higher by 143, I think was the number. I lost the thing there. 43 for the S&P, 143 on the Nasdaq. There we go. Thank you very much. So a lot of this today was based on the China news. And I don't think this China thing's over. This is just the temporary cycle, right? So the news cycle has gone from trade tariffs. I don't think it's done yet, but it's going to move on to something else now. And you're seeing this. If you've been kind of following me for a while, you know, and you've seen how we talk about the news cycles sort of just move through and focus on one thing over the other. So that's okay. Back to the charts here real quick so we could talk about your retirement investments. Can we get back to the chart? Yeah, there we go. So big news today. There's a couple things we've been talking about that have panned out here. The energy, remember over the last 4 days, we've been saying this move, if you go, actually now it's been a week. Wow, time flies, man. So we talked about this break below all the support and how a lot of people sold and it immediately reversed. That next day I said, this is a different reversal. I'm optimistic now of this breaking out. We've been pointing that out over the last few days. Today was the day, with the help of the price of oil, which shot up like 3.5%. With the help of oil, that pulled all the energy stocks higher. That is your best performer in your portfolio today. Very, very good breakout. We've been watching for that and kind of anticipating it. Turned out well. Another one that we've been focused on here, nope, not that one. We talked about the commodities. Yesterday we pointed out, see how this is kind of that push up towards the highs. We explained these lows and what all that means and explained the highs. So if you're interested, go back and watch yesterday's video on this. We said it looks like it's going to break out. Today was the day. Great breakout with the commodity sector. Anything in that space, really a lot of the help is coming from oil. So I think you understand that. Gold really didn't move a whole lot today. Silver, okay. But a lot of the other commodities sort of quiet there. Either way, that's your second best performer in your portfolio today. Did very well. Tech, anything tech related did well today. Got a good focus there, even though Facebook's been on TV all day. Mark Zuckerberg with the testifying in front of Congress, the dog and pony show, as they say. Which, by the way, side note, if you have a second, what's going on with the testimony to Congress? All of that already happened yesterday. So Mark Zuckerberg went to Washington yesterday and met with all these people already. They already had their closed door meetings. That's how you know this is sort of a joke, really. Has nothing to do with what's really going on. This is just for the cameras. Regardless, people seem to like what he said. Facebook was up 4.5% today. Not too bad. A couple stocks in the news that I thought were doing interesting things. Nike didn't really move today on the news, but they bought their second company. Remember, going back to the last earnings announcement, Nike said, what did they call it? Did I write it down? They called it their consumer direct offense strategy. They're going out and trying to make the consumer want to love Nike again, and part of that includes buying up a series of companies. They actually bought the one today. It was called Invertex. It's basically the deal where you can take your phone and you can point it at yourself and it'll sort of 3D model yourself for sizes and be more accurate and stuff like that. There's already companies out there like this. Nike went ahead and bought one of those, made comments that they would be continuing their transition. Remember last month they bought, I can't think of the name of it. They bought a company last month, which was their first purchase. So they're out there spending money. They want to get you to love them again, and we'll see what happens. On the downside, Tupperware. You guys know what Tupperware is, right? Well, Tupperware has fallen off the charts. Actually, on the screen there, it's just under our logo. It fell 11.5% today. They lowered their guidance on almost everything going forward. They basically brought the bar down, whereas Wall Street's always trying to push the bar higher. Today they came out and said, hey, lower that bar. We're not going to perform as well as you thought. They lowered their first quarter earnings outlook, their revenue, they lowered that by 2%, and they said sales would probably be lower as well. Not good. I mean, good for them for coming out early and saying that, but the stock's now down by about 35% on the year. That's pretty nasty. So Apple, there we go. Apple. Shares were higher. No, yeah, they were up by 2% today. Apple now says that all of their production facilities and all of their customer support, you name it, all of their facilities all over the world are now powered with renewable energy. The sort of sneakiness there is they're not all like powered by solar panels and all this stuff. Some of them are powered by renewable energy directly, and others are powered by buying credits. So they're essentially, they're still using electricity, but they bought credits ahead of time. So a little bit of sort of, gotcha kind of news there, right? But they did put out, they said, they put a request to their suppliers, make the switch to renewable energy. And they said, if you do, we'll give you a leg up in winning future business. So kind of just saying, hey, if you guys follow in our footsteps, we might give you some more business in the future. I don't know. I don't. We'll see how that goes. Other than that, let me take a quick look around here and see. Tech was a good performer. Obviously, your markets did well today. So a lot of good stuff on the screen. I'm going to keep it short and just kind of leave it at that. It was a great day. We'll see if this means anything. We need a little more information to see if we're going to move out of this range. I'll answer a few questions and then wrap it up. We need at least a week of this. We have 13 days. Is that not good enough for you? What's up with Spotify? I figured it would be going down if it's competing against the likes of Amazon. Spotify's the big one though, right? They're bigger than everybody. Spotify settling in nicely. My main concern was volatility here on this one. I thought for sure this would be a lot more volatile. They have done everything in their power to keep this calm. This is a new IPO, by the way. The reason the candles look so big on your screen is because that's the first day. It traded here, 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 and here, and that's it. So only open for 6 days. They have an ambitious plan ahead. We'll see what they can do. You can't actually see it. Yeah, there you go. Kratos. How are you going to offer HSAs? Don't you need to have a high deductible health insurance plan to have one of those accounts? You do. You have to have a high deductible insurance plan, which maybe you don't, but a lot of people do. And that would be the first criteria. It's kind of like opening a 401k. You got to have a job that offers one before you can have one. So we'll make sure we will take care of you there. Tupperware, that's the things left over from Publix after eating what's inside. They use paper now, don't they? And Publix, that tells me a little bit more about where you're from, huh? You got Publix in your neck of the woods. You must be somewhat near me. All right, I'm going to wrap it up there. I appreciate you guys watching live. If you're watching this after the fact, remember, if you're a client and you want me to cover something for you in this class, here's how this is going to go, by the way. You are going to sign up for the class. It is completely free. It will be to all of our clients. I'll send out an email. You're going to click the button and the first class is going to come to you. A week later, the next class will come. But if you can't wait a week and you just have to get started, you'll be able to click a button and the next one will come. You can click the button as many times as you want and the email videos will continue to come to you at your pace. If you want to stop for a while and take a break, then it'll be another week before the emails come out. So think of it as every week, unless you want to speed things up. That's the path for right now. So I'm pretty excited about it. Anyways, enjoy. Thanks for watching. If you have any questions or want to talk to us, jazzwealth.com. We'll see you then.